Hey friendos, welcome to ShareTreck. This is Sandeep here, and today we're going to talk about a genomics company that should be familiar to all of us and is one of the companies that I think is one of the three big pillars of genomic editing. CRISPR, Intellia, BEAM. But let's get started. Welcome back, friendos. BEAM Therapeutics, a company that most of us here on the genomics channel are very familiar with. Great technology. This base editing technology, it is highly precise, it's predictable, it's versatile, and for those of you who don't know too much about it, CRISPR goes in and edits the gene, kind of cuts and puts a new gene, but BEAM, it goes in there and with the base editing, kind of uses like a pencil to write it in right away. It's much more clean, it sounds much more neat, and it's much more versatile, but how is a company fundamentally? How is balance sheets? How is the company doing? And how is it going to do in the future? And I'm here to tell you what's up and what I discovered from their financial statements. First of all, Beam, it says it continues to make strides in terms of clinical trials, sickle cell disease, and other genetic diseases, and its patient dosing and enrollment process is going well. And more data is expected to come out in this year, 2024, in terms of what's going on in their pipeline. What is going on in their pipeline is, I will just show a little quick thing. As you can see over here, in their pipeline, we got a few drugs in phase two, pardon me, yeah, phase one, phase two, and a few things coming up. But you could also see over here a few drugs, a few treatments with some of their big partners. And we'll get into that a little bit later. But I like to introduce this, get a good idea, some of their BEAM 101 escape therapies, and so on. But what I discovered and what was really optimistic about their recent earnings statement was the company says as of the end of Q4 2023, as of the end of December 2023, it has $1.2 billion in cash and cash equivalents. And that is enough to support operations until 2027. That is really optimistic, Theo. That's nice to hear. And when I went through their balance sheet, when I went through their statements, I found this to be true. I just did a quick little look through, and as we can see here, they have enough cash equivalents to knock out all of their current liabilities and all of their total liabilities. That is really nice to hear. It shows that the balance sheet risk is very low right now, and it's a very big positive for the company. So nice balance sheet risk so far. But how does Beam Therapeutics make its money? How does this company get some of this cash input? So what similar to CRISPR Therapeutics, Beam follows a revenue recognition project, revenue recognition from his big contracts from his partners. And this year they recognized $337 million in revenue. It's basically they got a big sum of money in the beginning, and they're taking some of that every single year, and they're recognizing that over time. These include from their Lilly partnership, from their Pfizer partnership, from some of their other partnerships. So from that, they have a cash position of about 1.2 billion, which is up from 1.1 billion the prior year. However, that isn't all just rainbow and butterflies. Their R&D expenses, it has gone up quite a bit. Their G&A expenses also ballooning upwards. And if we were to take a look at, although the cash run is nice, I went to look at their cash flow statement and try to find out where is their money coming from. And what I discovered was, I'll just show you over here. what I've done here is I kind of went ahead and I summarized everything for all of our wonderful viewers. They are getting cash, $250 million in cash from operations this year from their Lilly agreement, and another almost $236 million from equity dilution and from us, the shareholder. So we have provided almost as much as Lilly has, and another $12.86 million investing activities. Now, what this investing activities is the company has a lot of cash and they use that cash in short-term securities. And those short-term securities pay interest. That interest in the past year is accounted to almost $13 million, which is quite nice. In addition to that revenue of 337 that I mentioned earlier coming from the revenue recognition. So if we were to kind of take a look at a percentage breakdown of the cash they got from the prior year, almost equal amounts from us, the shareholder, and Lilly, and then a little bit from their investments. But I also took a look at what their money is coming out from. And I'm going to explain this 15 million from Harvard and the Broad Institute in a little bit. Though they are going to be paying about 205 from their current liabilities, and from the long-term liabilities, almost 160. It is almost 400 million in the end. And this includes I'm going to get into this later, where 90 million from their contingent liabilities from this Harvard and Broad Institute was already covered in their balance sheet. As you can see here, they're making more money, more cash is coming in than coming out by over $100 million, which is quite a positive to see. So why do I keep talking about this Broad Institute, this Harvard thing? What is going on with this? Reading through the statements, I discovered that BEAM Therapeutics has entered an agreement with Harvard and the Broad Institute, where they get research from Harvard and they get research from the Broad Institute, but they must pay these companies a certain sum of money. Now, it says over here that they're making this payments through fair market value of stock, but 15 million for Harvard and 15 million for the Broad Institute each and every year. In addition, they must pay 90 million to each of these companies, which is recognized on their balance sheet, however, that 15 million each. So I added that one in. In addition to that 90 million and 15, they are paying about 175,000 shares to Harvard and the Broad Institute. So this is a little bit eye-opening, where they have almost this hidden expense, this hidden liability, this hidden debtor in Harvard and the Broad Institute, which they must pay each and every year. And they're paying almost 100 million to each of them in order to continue their operations, which is surprising. What is this? Some kind of like mafia situation? They must be getting something. They are getting research. They are getting used to a lot of these, a lot of the resources that these big institutes have. However, this is a liability that they're going to be paying each and every year, and this liability could grow. Though that's not all negative. What I did find out from reading their statements is they have some hidden revenue here and there, which was very, very uplifting to hear. So in addition to recognizing their payments, they get something called milestone payments and commercial milestone payments and royalties. The royalties are sales based, and right now they don't have very many sales, but that's something to consider in the future. These milestone payments. And I don't have a dollar amount for these, but this could be really big. And this could really push BEAM's revenue to another level. what happens in these milestone payments is Beam gets money from their partners each time a big development is reached, like a big drug or a big achievement in their pipeline, maybe positive news from some of their clinical trials. This could be quite enticing and could really improve Beam and show that they're getting revenue when they somehow aren't. But talking a lot about their partners, what partners they have? They got Pfizer, Apellis Pharmaceuticals, Verb Therapeutics, Sana Biotechnology, Orbital Therapeutics, and their big one, which is Lilly, Eli Lilly. Pfizer, we know much about the Pfizer agreement, but it started in 2021 and is a 4-year agreement. So this is one of the risks that I discovered. That 4 years is coming up soon. And Pfizer right now has a 35-65 split with all the profits and costs. When this deal comes through next year, what if that changes and becomes less favorable to Beam? It's a risk to consider. The Apellis Therapeutics, it's mainly a research partnership, and it started in June of 2021, though it is a research partnership for eye, liver, and brain technology and treatments. Beam says that they may elect to enter into a 50-50 agreement in the future, and that could be great. A nice partnership in the future. Verb, Sana, and Orbital. This is, I don't see a dollar amount because this is more so for research. They're sharing their research. They're helping one another out. Verb, however, is part of this little Eli Lilly deal where they get 200 million in payment from the Eli Lilly agreement and up to an additional 350 million in the future, which pretty cool. If we're going to go dig a little bit further, one of the risks that Beam says is they have market risk, specifically dealing with interest rates. As we saw earlier in that slide, Beam gets a significant portion of its revenue from just its marketable securities and its securities gaining interest revenue. And if interest rates were to change and change quite a bit, that revenue can decline or even increase. So Beam recognizes that, and they see themselves as low risk investors. Because low risk investors, that return on cash is huge. And especially considering this Harvard Broad Institute deal, Beam needs a lot more cash, especially in the future, especially after 2027. They can't just keep coming to us, the shareholder, for almost half of their revenue. Eventually, they got to do something. Now, what do I think about Beam? The company, looking at many of their big highlights of their balance sheet, there's nothing too significant. It is a money-losing company. A lot of this isn't too big and too important because it's a money-losing revenue. So margin is not as prominent as with many other companies we cover. However, going through the balance sheet, going through the financial statements, finding out that these royalty payments, these milestone payments could be big, but also discovering that they're going to need to kick back a whole bunch of money here or there to Harvard and the Broad Institute, which varies. This year they gave 15 million. Next year they might be even fewer or even greater. And the Pfizer deal is coming up soon. Do I think BEAM Therapeutics is a good buy at the moment? The problem is there's not really a steady income stream right now. And a lot of their revenue is subject to other factors, their partners, and also us, the shareholders. The Pfizer deal is coming due soon, and that can be a positive, something to consider when we see what renews it next year. Is it a buy right now? Honestly, that technology is cool. It's great. I love the technology. Technology is so neat, but from a fundamental perspective, I think there are better options. Personally, I prefer CRISPR. CRISPR is a lot more upside, in my opinion, and a lot less downside, in my opinion. CRISPR operates in more countries and has a much stronger balance sheet and stronger relationships to its partners. In my opinion, Vertex is a much more reliable and a much better partner with a better reputation than companies like Pfizer. And Vertex shares the burden with CRISPR. A little bit of a much more favorable deal with a 60-40 rather than 35-65. Until Beam can improve its revenue stream, which we'll see closer to 2027, the company did say that their revenue, where they have cash until 2027, they expect a lot of this pipeline revenue to come into play in 2027. So I'd like to see what happens. However, this incentive reward program, which is doing very well, which is delivering some, it's very, very neat. And it's almost like a hidden goal, but they also have hidden obligations. One of those being that they have a rent agreement until 2037, and they cannot back out of that rent agreement. That rent agreement is going to be adding in almost 230 million dollars. So it's a additional expense. Maybe they think they can stay in operation until 2037, but if they can't, that could be a big issue. So lots of rent, lots of research expenses, and that's why I do like the company, but I just prefer CRISPR. I think CRISPR is a better deal and a better stock, in my opinion. I think there's better options for your money, even within the genomics field, though I like seeing that the company has a better balance sheet than some of us might have thought. But what do you think? What do you all there in the viewers in the ShareTreck world think? Is Beam a great genomics company? Do you prefer other genomics company? Did you know about that Broad Institute and Harvard payment structure and the milestone payment thing? What do you think? What is your favorite genomics company? Let us know in the comments below. After that, I really thank you for listening to this, and let me know what you want me to cover next. Thank you kindly. Everybody, have yourself a great day, and until next time, we'll see you later.